Hi. Okay, this lesson, in order to understand this lesson fully, you should also have gone through the previous lesson one and I mean lesson three, part one and part two, and all the other lesson. You should go to our website, doyourowncompanyaccounts.com. Under tuition, click A level, and then if you scroll down, you would see accounting lesson one, part one and part two. So you should also watch these two video in order to understand. Okay, so then this is that came out in 2003, paper one, question 7 of A level. Okay, you should have all the past year exam question papers like what I've said before. I will be providing a copy of this, so if you want, you can you can take a paper and copy down. You can remember better by copying down. So this question says that prepare sales ledger and purchases ledger control account for October 2003. Purchases ledger control account I've explained earlier. So now I will prepare sales ledger control account for October 2003. So I draw up the structure, okay, like this. So this one, sales ledger balance at 1 October 2003 is debit balance 32900, then this is credit balance. So debit balance I'll put on the debit side. Okay, so the balance brought down should be always on the correct side one, like what I said before. It should be, so the debit balance I put on the debit side. The credit balance, the balance brought down. Okay, the the balance brought down of the credit balance 1008 I'll put over here. Okay, so this one, sales for October, cash sales. So cash sales will be put in the cash book. I mean, if I sell to them and then they pay cash, so they were never my debtors before. So this one, sales ledger control account, means the same as debtors control account. So that means cash sales has nothing to do with debtors. They were never my debtors before. So don't put in the debtors control account. So sales ledger control account means the same as debtors control account. So sales for October, this is credit sales, 44200. So if I sell to them on credit, they will owe me more money. Okay, so I put on the debit side. Okay, so to because they owe me more money, so I put on the debit side. This one is debtors control account, is debit nature. Okay, so I put here 44200. And then here, discount allowed. Okay, purchases has nothing to do with debtors. Okay, discount allowed, that means I give discount to my debtors. If I give discount to my debtors will owe me will owe me less money. Okay, so if I give them discount, they will owe me less money. They will reduce my debtors balance. So if it reduce my debtors balance, I put on the credit side. Okay. Okay, so then cash received from debtors 45400. So if my debtors pay me cash, they will owe me less money. So put on the credit side. Credit side will reduce the debtors balance. So put this one will put on the credit side. So the other account is cash. So I put here. Okay, cash paid to creditor, nothing to discount received and cash paid to creditor, nothing to do with debtors. Okay, bad debt written off 1850. Bad debt written off, so I'll put on the credit side because I am treating as if this debt cannot be collected already. So that means I'm actually writing off against the debtors account. So that means I am treating as if, fed up. Okay, I treat it as if you never owe me before. So reduce it from the debtors balance. So I put it on the credit side. Bad debt written off 1850. Okay, dishonored check 1002. This one means the debtors give me a check. So at first I treated it as if they have paid me. So I have entered into the debtors account. But the check bounced. That means the check cannot clear. Okay, so that means they still they owe me back. Okay, so that means it will increase the debtors balance. So the other account is bank, so the check is dishonored. So this one is 1002 put on the debit side. So it will increase the debtors balance because the check bounced. So that means they owe me again. Okay, 1,002. Okay, goods returned to credit supplier, this has nothing to do with debtors. Goods returned by credit customer, 3,001. Okay, so this is a sale return. Okay, sale return will reduce the amount owing by debtors, so we'll put on the credit side. Okay, cash received for bad debt previously written off. Okay, this one has nothing to do with debtors because remember we discussed about book of prime entry before. So this is a cash transaction. Cash transaction, it will go to the cash book. It will go to the cash book, and then the debt was previously written off. So so that means now you receive the cash, you will treat it as win lottery, okay? So you debit cash, and then you credit an income, you create an income account called bad debt recovered. So this has nothing to nothing, is not touching the debtor's account anymore. Okay, so you debit cash and then you credit bad debt recovered because you're treating as a windfall income. Okay. Balance in sales ledger offset against purchases ledger. So this one I have explained before. So this one you will put on the credit side. This is the contra. Okay, put here. Okay, so then this one purchases ledger balance, nothing to do with debtors. Sales ledger balance, the credit balance of a sales ledger. This one also this nature also I explained before. So the balance carried down would be on the debit side because the balance, so that the balance brought down will be on the credit side. The balance brought down should be always on the correct side one. So it's a credit balance, so the balance brought down should be on the credit side. So the balance carried down, the balance brought down should be on the credit side, so the balance brought down should be on the debit side here. Okay, then you see which side bigger. Okay, this side is bigger, so I put the same figure. And this one minus everything, then I will get this one. Okay, so the rest of the question I have covered in the previous lesson 3 part 2 already. Okay, thank you, bye.